Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. Today, we have a very, very special guest, James Lavish. I consider him one of the macro heavyweights of Bitcoin Twitter and just Twitter in general. This guy drops so much sauce on his newsletter and on his tweets. Definitely recommend following him if you aren't already doing so. But before I bring him up on stage, I do want to give a shout out to the Bitcoin company that makes this show possible. Of course, I'm talking about Bitcoin Well. They're a publicly traded company coming out of Canada that recently expanded to the United States, and they're the first company, the first Bitcoin on-ramp in the US that is self-custody by default. That's right. If you want to buy Bitcoin on Bitcoin Well, you have to take self-custody, which perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Check out bitcoinwell.com today. All right, ladies and gentlemen, no more delay. I do want to bring up Mr. James Lavish. We recently crossed paths in Portugal. James, it was great to see you in person, and it's great to see you once again. How you doing?
Well, it's awesome to be here, Nico. Thank you for having me, and especially in such a busy time yourself, new dad and all. Awesome.
Yeah, it's it's kind of in the twilight zone where
You're
don't
gonna be
sleep.
in survival mode for years.
Oh God. Okay. All right. Well, thank God for Bitcoin at least.
And then they'll get to college.
And I have a girl, so that should be interesting.
Dude, that's awesome, though. It's so much fun.
Oh my God, I'm excited. I'm excited. Anyways,
yeah.
So I want to start off this episode relatively spicy. I have a clip for us. So I want to get your thoughts on it.
Yeah.
Because they expect
because they want to sell it eventually,
desirable.
Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but like most of the people who are buying assets at some point want to sell the assets at a profit. So
let me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that's rich in the
Yeah, I mean, that was pretty intense.
He doesn't mince words. The issue here, Nico, is it's extraordinarily difficult for anybody to get out of their own way of thinking of the world that they grew up in. We grew up being told and taught that inflation is normal. It's just part of life, and you invest in order to make more money. You're not investing, some people invest to make more money in that you're creating productivity, extra productivity. You're finding something that's really scarce and value, like real estate in an area that's really expanding. And so you beat inflation doing that. But really, people invest to keep up with inflation. And so they sell things because they're investing it to hold on to something while they're waiting to buy something else. And, he's right. And I understand where she's coming from. I grew up in that world. And that's where most people still live, especially institutional investors, traditional investors, TradFi. That's where they live. That's where their brains are. And it's difficult for them to get out of their own way.
Yeah, and I've experienced that personally, trying to orange pill just close family members of mine and stuff like that. And if let's say you have a decent sized portfolio and you're used to having to operate in this mindset where you have to become a part-time investor just to maintain your purchasing power. Whether that's, going into real estate, you look into wealth, wealth managers, wealth advisors, et cetera, et cetera. So, the idea of approaching them and saying, hey, listen, all you really have to do is just DCA, buy this stuff, take self-custody.
Yep, they'll never, it doesn't compute. It does not compute. It still doesn't compute. I still talk to people in my old world and they kind of chuckle. They're like, oh yeah, I was into Bitcoin back in 2014, 2015, and it's a fun rabbit hole to go down. What? And that's it. Oh yeah, I sold it. It's like, then you didn't understand it. You truly didn't do all the work. You went down the rabbit hole of this is a cool technology to own and fun. That's it, So
it's definitely interesting to say the least. So James, Michael Saylor continues this extremely aggressive kind of, this rinse and repeat cycle. He just announced recently, and of course, Bitcoin Twitter is losing their minds. March 11th, he announced completes a $800 million offering of convertible notes at, these crazy, kind of rates and stuff. And he just announced another one today, March 13th. So just continues to raise money, leverage his company to raise money to buy more Bitcoin. It's like this never ending cycle. So James, for our audience, could you kind of explain what he's doing, what mechanisms he's using, how he's leveraging his company in order to continue to raise more and more and more money to buy more Bitcoin? It's almost as if he's like printing money to buy Bitcoin, from my perspective.
You look, he's got a hoard of Bitcoin on his balance sheet. He's got an underlying company on top of it, but he's just leveraging the balance sheet in order to borrow money, using borrowing money and convertible bonds, and buying more Bitcoin. Those will convert at a much higher price, and so that allows him to borrow at a super low rate. Why? Because whoever owns those owns those bonds, they basically have a call option on the stock too, and so it's a great deal. And he's just continuing to go back to the well, and that's why you see a premium in the share price. If you take how much Bitcoin he owns and MicroStrategy, and you divide by the shares, and the price of the shares are, and you take down the other business down to a minimal value, the shares are trading at 60, 70, 80% premium, in the last few days to that underlying Bitcoin. And it's because the expectation he's going to continue to do this. And as Bitcoin goes up, he's going to benefit from it. It's a brilliant strategy. And I don't understand why some other companies don't do it, why they don't put some Bitcoin on their own balance sheets. It's absolutely maddening to think that you've got Apple and Microsoft with over $100 billion between them on their balance sheets, and they're just not there. If they are buying it, they're being extremely quiet about it. But now with the FASB ruling, where you can mark to market rather than having to take an impaired loss on it, that's a really big deal for these guys. So I think these are all doors that are opening now. The barriers are being toppled for institutional investors and for companies to add to their balance sheet, so in their treasury.
Yeah, and I kind of want to double back to what we were talking about, like right in kind of in the beginning of the podcast, and it kind of connects to what you're saying. And I remember I had the privilege of being able to speak to Saylor, and I asked him exactly what you just said, which is like, okay, you had your quarterly report. And I remember in the quarterly report, it was awesome because it was Saylor and it was a slideshow basically showing that MicroStrategy is just outperforming everything else. And one of the interns or producers and tried to put that slide down, and Saylor's like, no, leave it up. And he just continues like for 30 minutes explaining why Bitcoin is this everything. And I told him, I was like, look, you've already proved it. You're vindicated. Right? The MicroStrategy Bitcoin strategy is clearly working. Why is it taking so long for people to really switch? And this connects to what we were talking about earlier. And with your background, James, right? You were in the belly of the beast, so to speak. Why is it that it's taking so long for people to fully understand this new emerging asset, especially if you come from that legacy background?
Yeah, I mean, there's no incentive, right? You've done so well off the traditional finance, off the legacy fiat financial system. There's no incentive. The stocks are still going up. Yeah, we have inflation, but the companies are expanding. And these guys are taking down massive pay packages. So if you think about it this way, continue to do what they do in the system that they know. And they're very good at it. Financial engineering, buying back shares, setting themselves up with these pay packages that are tied to share, the stock performance. they can use PayPal, they can use stock purchases and to buy back stock and then put them in the treasury and then hand those out to executives. And they just do that. Like this is the way they get paid, and they're incentivized to continue that way. Why would they change that model? If they go out and buy Bitcoin and put that on their balance sheet, that's something different. They're stepping outside the norm. They're taking a risk personally and professionally to do that, because if something happens where Bitcoin does drop in value by 70 or 80%, like it did, then they could be fired. Michael has he, and I talked to him about this long ago, is that he has the not the luxury, but the ability to do this without anybody questioning, because he owns over 50% of the stock. These guys don't, most of these CEOs own just a fraction of their company. They don't own 50%, like literally just a fraction. They sold out of most of it when they did their IPO, or they've sold out of most of their stock along the way. That's the problem, is that there's too much personal and professional risk, and there's too little incentive for them to do it. So,
okay. And I'm glad that you kind of broke it down based on your experience, and the fact that do you think that we'll ever reach a point where the incentive is there? I mean, like,
yeah.
How long, and I don't think it's a coincidence, by the way, that the CEO of Vanguard resigned. Okay. Especially with the whole BlackRock thing going on. And the amount of institutional inflows that are going into that ETF. But, when do we, and I think there was a panel on this actually at Bitcoin Atlantis, when do we jump that chasm? Like, when do we go from early adopter to early majority? What needs to happen in order for us to make that jump, so to speak?
Well, we're experiencing it now with the ETFs. This has created an easy on-ramp for all these institutions that just couldn't buy before. Okay. So there's two things going on. Number one, the CEOs of these big companies, they could buy it and put it on their balance sheets. They have the ability to do that. They have to go through some headache to do it, but they could do it. Institutions like pension funds, endowments, they can't really just, and registered investment advisors, some family offices, they don't have the ability to go and just buy Bitcoin on its own. I've talked about this many, many times. And so it's not just professional risk, it's just huge barriers to entry for them. But now that we have the ETF, it makes it so simple, because instead of having to go through meetings and compliance and structures and operational issues and getting things approved and, things that take months and months and maybe years, now they can just say, hey, this is an asset that I want to own and put it on our balance or put it in our portfolios. And now we can just buy it through the same traders on the same exchanges with the same prime broker, settling it and custodying it with the same prime broker, and then pricing it just like any other stock and the market values. It makes it super simple. And so now all you're seeing is that highway's built, and it's easy for them to get on. All they have to do is build their own on-ramp. And that has to do with, if you're an institution, you have to have the meetings. You have to decide, do we want it in our portfolios? And then, how are we going to message? Like, what is the messaging around that to our investors, to the people that we need to answer to? And then if you're an RIA, you have to get approvals from your overriding company. You have to have the right verbiage, that you can have a sales pitch, or you can agree to allow them to buy this. And they have to check a box to understand that there's high risk because it's so volatile, whatever they want to say, just to CYA, cover your ass. And then that's it. They can, once they have that built and they've got the QSIP in their system, well, they can buy it for their investors just like any other stock. And we're seeing that happen every single day. Just a few more RIAs, maybe a couple institutions. They're just kind of coming on, and they're putting on their on-ramps. And that's why you're seeing every single day $300, $400, $500 million is coming into net of the GBTC outflows, is coming into these ETFs. And yesterday we had like $1 billion come in. And so, and then the function of the price is a whole nother matter, but that's what we're seeing happen. When does it when does it go widespread? Good question. I believe that it happens slowly, and we're seeing it happen. And what is going on here is that everybody's looking around and going, "Hey, do you own that? Are you, so you're buying this?" And so, "Oh, I should have, we need to put this in our portfolios." And so what we would do, and I've mentioned this before, is if there was something that we really thought we should own, you sense like this risk reward at my first glance looks like something I really want to own, just looking at whatever it is, the financials or the opportunity. What I'm going to do is I'm just going to buy a little bit and then I'm going to dig in. And that's called legging into the trade. You just leg into the trade by buying 1% or 2%, and then you really dig in, or 0.5%, anything, just to make yourself do the work, because now it's on your portfolio and it's on every single day. You're going to see it there. So you got to say, "Oh, is this something I want to own or not? Do I want to add to it, or want to just take it off the books?" Because it's staring at you every single day as you look at your sheets. So that's what you're seeing people do. And so they're just going to continue to dig in and continue to learn more and understand why it's different. And then suddenly you're going to see people put it in a lot of portfolios and have it a segregated kind of allocation to an asset across the board. And that's what I believe we're going to see.
And that kind of, it reminds me of your presentation at Bitcoin Atlantis. Basically, and you're making the case, the 3% Bitcoin allocation versus the 60-40 portfolio. Do you want to elaborate a little bit on that? Because I really enjoyed that presentation, James.
Yeah, I mean, basically, if you look at all of the different assets out there that you could own instead of Bitcoin, right? Or you could have owned Bitcoin instead of. If you look at treasuries over the last 12 years, and this is before I did that presentation, Nico, before we even left from Madeira. So, and the Bitcoin was at $50,000. So now it's up another 40%.
Wait. Hold on. Let me clarify. You prepared the presentation before you left to Madeira.
Yeah.
Wow, so it reinforced.
All these numbers that I'll quote to you is they're old. I mean, they're really stale. But the numbers in reality are far better. So Bitcoin versus long-term treasuries over the course of the last 9 years, like it's outperformed by 16 times. Bitcoin versus gold 25 times, Bitcoin versus S&P over 10 times, and then it even outpaced the Magnificent Seven by 3 times. But when you look at this was a great kind of chart that Morningstar put together, and it basically, it just showed how if you owned zero allocation in Bitcoin and you just had a 60-40 bond allocation, over the course of the last 9 years, you had like a 175% return or something, right? And then if you add just 1% or 2%, you went up to 200%, you went up to 225%. If you added a 3% allocation to a 60-40 bond portfolio, and you took out 1.5% of the bonds and 1.5% of the equities, and you added 3% position in Bitcoin, you doubled your return. You were up over 300%. You're up like 330, 340% over the course of those 9 years. So it just, the bottom line is, it's the best performing but people would say, well, but look at all the volatility during that time. Look at the volatility. And if you look at the returns over the course of that period of 9 years, the biggest drawdown was only 21%, 21.3% if you added that 3% Bitcoin versus 20% for the 60-40 portfolio. So you didn't really add much volatility to your portfolio. You just added alpha, because your annualized return went from 8.9% to over 13%.
Holy
and
cow.
Again, this is before this move. This is through the end of the year. So, but over the last 11 years, Bitcoin's been the best performing asset out of the last 11 years. Like and the punchline of that whole presentation was, if this doesn't convince you to add Bitcoin to your portfolio, then maybe you shouldn't be managing money, at least not for other people.
Yeah, and no, it's okay. So it's to the point where if you don't add, if you're a wealth man, and by the way, I have a best friend of mine. We grew up together. Now he's VP Goldman Sachs, climbed the ladder, you know. And I've been telling him, I've been in Bitcoin for 8 years, and 8 years ago I told him, it's like, hey man, you have to buy this.
Buy some, buy a little.
Buy. And out of all my friends, all of my high school friends, I've convinced them all. Right. And then as soon as the BlackRock ETF got approved, I said, hey, man, welcome to Team Bitcoin, and he just responded, F you. Right. But the point I'm trying to make is it is irresponsible not to at least have a, 1% or 2% or 3% allocation to Bitcoin at this moment in time. Exactly. You're hurting your clients if you don't do that.
And so when we were at dinner one night, we had a big table with Jeff and Preston, and we're all sitting around, and there's a couple behind us, and they're a retired couple. And they were listening to us, and they came up, and they said, so you're here for the Bitcoin thing? We're like, yeah, we're at the conference. And he's like, yeah, we've heard about that thing. I don't own any, I don't need it. I'm retired and I've got enough money. And I said, well, have you seen what's going on with U.S. debt and how, our deficits are growing, and how, honestly, we'll never pay it back, and your money is melting every year. And he said, yeah, but I don't really care. I mean, I've got enough money. It doesn't matter to me. I said, okay, let me ask you this. What happens if you're wrong and the dollar fails? Dollar will never fail. Never. I said, well, it will fail, and we just don't know when. What happens if you're wrong and it fails before you die? And he was literally walking out. I was like, I'm going to orange pill this guy. And so he goes, well, I don't think that'll happen. I said, okay, but let's just pretend that I'm right and you're wrong. What if you own 1% of your portfolio? You own 1% in Bitcoin, just 1%. And if I'm wrong, you lose 1% of your money. Who cares? But what if I'm right? What if I'm right and that 1% saves the whole rest of your portfolio? And he said, he stopped and he looked at his wife and he looked back and he goes, you know what? That's almost impossible to argue against. I think I'm going to have to go and buy 1% of Bitcoin.
Wow. I mean, it's so obvious. It's not obvious. Right. And it's exactly what you said. It's, entrenched people. Like the way that I describe it is really like the
entrenched. That's it. It's entrenched mentality. Like you can't get out of it.
Yeah. Exactly. And I understand because that was the way of the world. Like that was the way of the world.
I know people that I used to work with. I know, I mean, I don't know, but I have a strong sense that they're chuckling, thinking, what's Lavish doing in this whole Bitcoin thing, this whole Bitcoin world? Has he gone crazy? And I don't care. This has been an incredible experience. And I've met so many intelligent people, far more intelligent than your average, traditional in finance guy. I mean, it's absolutely incredible. And really what it comes down to, Nico, is the curiosity and the critical thinking. Bitcoiners can't be told what to do on anything. They want to know for themselves. They want to dig in for themselves. They want to back it up themselves. They want the proof of work. They want they want to understand why, how, what does that mean? I mean, what do you mean? Why does this work this way? Why are the ETFs doing this? Well, I mean, the fact that when the ETFs were announced, the fact that the ETFs were, about to start trading, and true Bitcoiners were like circling around going, wait. How's this going to work? Like, I want to understand this. When do they buy? How do they buy? Who settles it? What's an approved participant? What are the market makers, and how is this all happening? I want to understand the function of it. Like across the board, I had so many people asking those questions. When the gold ETFs are announced, even when the euro was announced, we weren't getting questions like that on the street. It was like, oh, now there's a euro. We'll just, we'll figure it out along the way. Just tell me how it works. Somebody tell me how this thing works instead of, digging in and figuring it out. And it's a big difference. The curiosity and the critical thinking is a huge difference.
Yeah. And I also got to say, we have the best people on our team, on Team Orange. I just got to say, the intellectual powerhouses that we have on our team, I know we're going to win. I know we're going to win. Anyways, so in the beginning of the show, I played a Michael Saylor drop mic moment. And Mr. James Lavish had a drop mic moment last night. This is how he left it. James, you said, "Good evening. The Bitcoin ETFs are still not priced in. In fact, they will not be for months, maybe years. Have a good night." So what did you mean by that?
I mean, exactly what I was talking about before is that, we're watching it happen in slow motion. The institutions getting on board and to understand it. And they don't have any choice now. And so they're figuring it out, but it takes time. I was even, and I'll admit this, I was optimistic on just how much capital will come in and how quickly. And the reality is all these guys were standing around flat foot. Like even the brokerage firms, my brokerage firm for my hedge fund, I had to instruct them to add the QSIP for IBIT and FBTC and to add it so we would be able to buy some if we wanted to. And that's my prime broker. And, they're Bitcoin friendly-ish, like nobody knew what was going on. So the SEC stonewalling for so long and refusing to give any information about, what the process was going to be, but just kept asking questions. You had indications that this was going to happen. It was imminent, but there was no surety. So none of those brokers and none of those houses had anything set up. And so when they rug pulled, 2 or 3 times with the tweet that they pulled down that the intern put up, and then, the filing they issued and then pulled it down. It was like, it was amateur hour. And so the street was like, well, tell us when it's live. Okay. Just tell us when it's live and then we'll figure it out. And that's literally what happened. So, and it's been a slow adoption curve since then. And we are literally, it's still at the very bottom of that adoption curve. Like it's barely moved. So this is going to happen for a long time. And it will pick up pace, in my opinion. It will gather momentum, and there will be some serious FOMO moments. And you could see $2,000, $3,000, $4,000, $5,000 candles in a blink. And part of that is not because they're chasing after it. Part of it is just a function of how these trading firms operate. So when you're an institutional investor and you want a percent of something, say you've got $100 million portfolio. I mean, you've got $1 billion portfolio and you want to go buy, a percent of it. You want to go buy $10 million worth. You're just going to say, hey, I need $10 million of that IBIT. And you're going to tell the broker, just go buy the $10 million worth. And so they're not going to go, oh, you know what? It traded at $72,100 and now it's at $72,700. Let's wait to see if it comes back. They're not going to say, let's wait until see it come back to 69,000. They're going to be like, I just want a percent. Go figure it out and just go along. And at the same time, you're going to have another institution do the same exact thing. Hey, I need $25 million worth. Just go figure it out. And at the same time, you're going to have another one that says, hey, I need $50 million. Just go, participate. Maybe buy 25 million here and then play around with the rest, or just VWAP it. And VWAP it means volume weighted average price. And they have sophisticated models now. They just plug it into a machine and it just participates all along the way. And so they're just not that price sensitive typically. If you're a big institution, just like it, go along. Don't embarrass me. Just make sure I get kind of the average price of the day. And I think there's going to be a day or two or more we've got a bunch of these institutions that just happen to come in at the same time. They're big and they're like, hey, we need, instead of, you're not going to see like $1 billion come in. You'll see like 3, 4, 5, 6, $10 billion come in all at once, just by happenstance or by timing or whatever. And that will produce a very big candle in my opinion.
And I completely agree. And what's really interesting too is, and James, I think I've mentioned this to you and Larry and, and Jeff, when you guys come on the show, I did the exact opposite, right? Where, a third of my life, basically, I've been in Bitcoin, and being in Bitcoin, I've had to actually look back and learn the traditional financial system.
That's funny. Yeah.
Right. So it's like, and it's, you kind of see things, and it's a little bit, it's a little bit different. But one of the things I know is with gold, right? If the price of gold goes up, the production of gold goes up with it, right?
Right.
If the price of Bitcoin,
and the issuance of derivative paper gold goes up by a factor, by a multiple. Yeah.
and
Pour more paper on it. We can't have gold go too high.
so there's that with gold, right? And with Bitcoin, it doesn't matter how high the price goes. The production, not only does it stay the same, it's about to get cut in half in less than a month.
And then you've got psychopaths like you who are never going to sell. We're like, good luck, man.
Oh, I had Fred Krueger the other day. He came on and he's like, it's like there's going to be a point, where Bitcoin gets to a certain price, and you're going to want to sell, Nico. And I'm looking at him like I don't think you understand what this is about for us. I don't think you understand what it's about for the millennials and the Zoomers. We want separation of money, and say we want the money is nice. Don't get me wrong. Of course, everyone wants money, but no, I really believe that we actually want change. We want to make the world a better place.
Yeah, and that's why we're here, right? Ultimately why we're here.
Yeah. So anyways, you did post this as well. Silver had a couple 1,000-year head start. It seems like Bitcoin is catching up, kicking its ass, and very, very close. I mean, I wouldn't say very close, but it still looks like it's about a 10x to gold. We were just talking about gold not too long ago, about a second ago or so. I think it's superior to gold in every which way. The physical characteristics, the fact that it's absolutely scarce versus scarce. So how long is this process going to take? It's a superior asset. I think Saylor continuing to doing what he's doing, and it's going to continue to work, and it's going to continue to show the world that the MicroStrategy strategy is the way forward. How long until, Bitcoin takes the market cap of gold? Are we talking about, this cycle? Are we talking about the end of the decade? What are your expectations in that sense?
Well, I mean, let's work through it, right? So to take over gold, it's got to have let's call it $15 trillion market cap, according to this. I think this includes jewelry and all that, but let's just say it's got to go up 10x from here, right? So it's got to be like a $700,000, $800,000 asset. I mean, look, Nico, I believe that it hits that before 2030. My personal opinion is that there will be enough capital that comes into this space that it will just continue to gravitate up this ladder. It could jump into the number 2 spot this year. Who knows? I mean, it just has to pretty much double in price, right? So, trade in the 140s. That's distinctly possible this year. But as for the long road and getting up to be the number 1 asset, I mean, I talked about this in Madeira too, and updated some of the information on this. But if you look at all of the investable assets in the world, and you kind of break them down, there's a chart that I had, but there's about $950 trillion of global assets. $500 trillion of residential real estate, another 120 of commercial real estate, about 120, 130 trillion in bonds, 110, 120 trillion in stocks. You got 90 or 100 trillion dollars in M2. You've got gold of $10 trillion. You can also include, like rare and collectible items for another 20 or 30 trillion dollars. But then you got Bitcoin that's just $1 little trillion down there. It's just 0.1% of the total. But if you've got a quadrillion dollars of global assets, then Bitcoin, it doesn't think about it. It doesn't have to be that big to become a $14 trillion asset as far as a percentage of that, right? So, Bitcoin at 700,000, it's got to be, you're talking about taking just a few percent of this. Basically, it's not, at 1 trillion, you're at 0.1%. So, multiply that by your 10 times and you're there. And that's nothing. It's just, you can have either an allocation out of stocks, you can have some allocation out of bonds. You'll definitely have some allocation out of real estate because people invest in real estate for long-term hold of value. Definitely seeing an allocation out of gold and into Bitcoin, especially with the ETFs. It's been clear now. I was unsure of that at first. I thought maybe that's just coincidence that gold ETFs are reacting to the inflation numbers and the Fed and rates staying high, but gold is kind of moving away from that. So this is showing that the ETFs are clearly, some of that ETF capital is coming into Bitcoin, much to Peter Schiff's chagrin. So when does it happen? I think in this decade it happens, and I would be surprised if we're not knocking up against $1 million per coin by 2030.
Yeah, and I completely agree, and I think this cycle is also a little bit different, and I think that it might happen sooner, a lot sooner than people anticipate. And the reason I believe that is because the last cycle was cut short. Two primary reasons, in my opinion. I come from a mining background, so the China mining ban and the fact that the hash rate dropped 50%, and those miners had to literally sell corn to relocate to more favorable jurisdictions. And you see the price literally falling off a cliff with the hash rate coming off a cliff. And of course, the whole FTX debacle. So I think that the only reason that we didn't hit 100K last cycle was, due to these artificial, you could say, factors. But I think that this cycle, for the first time in Bitcoin's history, we're making an all-time high before the halving. And I think the ETFs played a major role in that.
Go ahead. Sorry, I did not.
No. Continue.
I don't hold a lot of weight in the cycles and diminishing returns. Like you're talking about just a few data points there, right?
Mm-hmm.
I mean, I'd rather liken it to an adoption curve and watch that adoption curve and how that's happening. And that's really much, to me, it seems to be following that much more closely on a technology adoption curve, kind of like the cell phone, or kind of like, Facebook or whatever it would be, that curve, the way that happens, and it's following that pretty closely. Now, the difference here is that we have had structural challenges that you didn't have elsewhere. And so now you've got this huge bump in the ability for the adoption curve to kind of bump up or accelerate. And that has to do with the ETFs and with FASB, the FASB ruling. Those are two big things. I wouldn't discount that FASB ruling either. What's going to be interesting, though, Nico, is when we have filings in a month and to see who actually has been buying these ETFs and what those holders look like. That's going to be very interesting.
Oh, that's fascinating. That's right. Because okay, and you're wagering that you believe a major Fortune 500 company.
I don't think that they're going to. I think if they're buying Bitcoin, they're going to do it in their treasury, more like, well, I don't know. I mean, let's see. Let's see what.
So then what exactly are you curious about with these filings?
I'm curious to see what names come up on these ETFs. I'm curious to see if we see a Texas Teachers, or we see a CalPERS, or we see a big retirement fund. or a big pension fund. I'd like to see like who kind of shows up in there. I don't expect anything big, but you just never know. And it behooves these guys get in there out of the gates pretty quickly. Now, I mean, you see it every day. And so I would say that one of the things that would temper demand is the economy and what's going on with the economy. And if you're concerned about there being a big downturn in the economy, you probably are not adding. However, we have entered a stage of just lunacy with the fiscal spending and just how irresponsible it is. And just you have the Fed that's been tightening monetary policy, and you've got the government who's been spending recklessly and running 7% deficits, 7% to GDP deficits, which is just insane. It's unheard of. Like, you don't do that unless you've got like 5, 8, 10% unemployment. Typically, you don't do that unless you're in a recession. And here we are running multi-trillion-dollar deficits, which is expansionary. It's inflationary. It's injecting liquidity into the economy. You know, it's literally stimulating. It's stimulative. So I think that's why you will see some players come into this that you may not have otherwise in this stage of the kind of the monetary cycle. So
gotcha. Yeah, no, and you're talking about it, and I could tell that you spend a tremendous amount of time, thinking about this and writing about this, the debt spiral, and like from again, from my generation, and we just had on the live show today, we had a Zoomer, and I was like, man, we got the short end of the stick, but dude, like, you really got the short end of the stick. And it's really interesting because, there's this really famous website called Price for Bitcoin 21. And it shows you that I live in Miami, right? So real estate has literally doubled, maybe tripled in the last, 2 or 3 years.
Yeah.
If it wasn't for Bitcoin, like holy cow, things, even with real estate doubling or tripling, real estate has actually gotten cheaper for me because I'm on a Bitcoin standard, right? But the point that I'm trying to make, James, is that with all this deficit spending, right, with all this money printing that's happening, that the government's just going crazy, there are real life consequences to this. It affects people. Guy Swan did an incredible video the other day. Robert Breedlove mentioned it on Peter McCormack's show, right? This idea that you're essentially stealing time. I think that the figures that I saw from the Guy Swan's video is when the government printed that money, it equated to stealing the working lifetime, like the amount of time that someone works in their entire life. And it equated to 3 million people whose time was just evaporated. It just disappeared.
Incinerated.
Right?
Yeah.
So, and it doesn't look like this path, is sustainable. Lynn posted that very famous chart. It went viral. It went absolutely viral, where it's just like the line just keeps going up. Jerome Powell was quoted in an interview the other day. He's like, I think we're on an unsustainable fiscal path. Like they're even admitting it themselves.
Yeah, they all admit it.
What happens when this breaks? What happens when this falls apart? What happens when this debt spiral starts to spiral out of control like a black hole sucking in the star or something?
Well, first of all, it could take a long time. I mean, you're seeing the US dollar just swallow other currencies here. We have the benefit of being the strongest currency, and with rates up here, with our economy doing what it's doing, and the ability to keep the rates here, where our 10-year is higher than any of the other major currencies. The yen, it's way higher. Germany, Italy, France, doesn't matter. Like it's higher than all of these. So all of the 10-year rate, which means it's more attractive, which means it makes a stronger dollar. So, but how do we get there? That chart that you're talking about was a chart that was actually published by the Treasury itself. They was published in a report that was about the state of the Treasury in 2022, and it's basically, it said, actually it was the beginning of 2023 when they published this, and the subtitle of the chart was an unsustainable fiscal path, and it just showed debt to GDP rising exponentially. And they know it. They know it's happening. Well, why would the Treasury issue that? It's for the whole world to see. Like, they're just signaling, hey, we're absolutely, moronic. We are printing to oblivion. We're gonna, hyperinflate at some point. We're just letting the world know. No, that's not what they were doing. They're warning Congress. They're saying, you guys got to stop spending, man. We cannot continue like this. Because remember, it's not the Treasury making these decisions. The Treasury is just trying to manage the budget that the Congress is handing them. They're like, hey, we need to borrow another $2 trillion this year. Can you go ahead and make that happen? And so the Treasury's like, this is unsustainable. You guys understand, like, we cannot keep, you're making us issue so much debt. You heard Yellen say it today. We've got to cut the deficit. We must cut the deficit. We've got to stop this. This is insanity. And so, what will happen is we will see entrenched inflation. We will see the continued, injection of liquidity to make sure that Treasury markets continue to operate and function with liquidity and normally. Because if they don't function normally, if we have a hiccup in the Treasury market, we're toast. And so that'll be a dump of liquidity. We saw it happen in 2008. We saw it happen in 2019. We saw it happen in 2020. And we're just there comes to be moments where there's just not enough liquidity, and it looks like the Treasury market's going to kind of lock up. And so the Fed and the Treasury just flood the market with more liquidity, and that's what they will need to do. So we're all waiting around for a few things to happen. First, we're just watching structural inflation. It's going to happen. We've seen it. It's settled in around 3% here. The Fed is not going to, they're not going to raise rates on a 3-4% inflation. They're going to watch. They're probably going to lower rates soon. How can they argue that it's okay to lower rates when you see that structural inflation is at 3%? Well, because they all know that the Treasury is issuing so much debt, the government's spending so much money, the deficits are so high that they've got to somehow inflate GDP nominally by creating more dollars. And that's inflation. They just need more dollars out there so they can continue this charade until something breaks, until something, happens where you just need a tsunami of liquidity. And then you have inflation that will run Luke Groman talks about this. You could have periods of inflation that are 12, 15, 18%. We'll go back to the 1980s and just runs hot for a while. And they allow it to run hot for a while. Why? Because that will help lower that debt to GDP number, because you're paying down old debt with cheaper dollars. I fully expect it. And that'll be, it's kind of like we had that first wave of liquidity in 2008. We kind of had a warning back in 1987, 1998. We had a couple of warnings, but you've had this earthquake, and the tectonic plates have shifted. And now you had this one wave came in, and it was 2008. You had another wave that was bigger come in 2020. And this next wave is going to be an absolute tsunami of capital that comes into the markets, because they don't have a choice. That's the point we're at. Does that make it fail? Does that make it go into Bitcoinization? Does it hyperinflate the dollar? Possibly. I don't think so. I think we can sustain this for another cycle or two, especially because we're the global reserve currency and the global reserve asset. But it remains to be seen. All I know is it cannot continue forever. Everybody knows it. And like you said, even Jerome Powell said on 60 Minutes the other day, it's unsustainable.
Yeah. Yeah. No, and you know, and this, ladies and gentlemen, is the debt spiral, right? James, let me ask you something. So, you know, this is a bleak future, but at the same time, it's a bleak future if you have the green tinted lenses on. But if you have the orange tinted lenses on, um, even with all this madness, some people call it the clown world, um, your life is still getting cheaper. Your cost of living is still getting cheaper. Your your hope for the future increases. Your optimism increases. It's you know
You sleep at night.
you
You can
sleep at
sleep at
night.
night.
You can sleep at night, right?
Yeah.
So what advice would you give? And there's different kind of spectrums to this, right? There's, you know, people that are just starting out their lives, you know, they don't, perhaps they don't have a really high net worth, but they're just starting out, right? And what advice would you give to perhaps the older generations where, you know, they've accumulated some wealth, and they want to maintain it? What advice, and of course, this isn't financial advice, ladies and gentlemen. This is just an opinion. This is just a conversation between me and James. But what advice would you give? Because these are very bleak topics. You know, these are this is hard hitting stuff. What advice would you give, you know, to people watching the show right now?
Yeah, I mean, this is the thing is I can't give anybody advice, and it's not because I'm not willing to. It's because I don't know your situation. I mean, you have to sit down and look at everybody's situation is different. You know, how much money they make, how much money they spend, what their needs are, what their future needs are, what their future expectations are. Like everybody's risk tolerance is different. Like it depends. It's different for everybody. So, but that being said, and one thing you can do if you're a young person and you've done your work, you start to do your work on Bitcoin, is just start to dollar cost average in each week. Just take whatever it is, $100 out of your paycheck. Figure out a way to minimize other expenses to make that happen if it's possible. I know it's not possible for everybody. That inflation is out of fucking control, and it's been very painful for a lot of people, and I know people who are suffering from it. It is not good. It's not cool. So I understand that, especially for the younger people who are just trying to get by. But if you can, that would be a good start. If you get a big lump sum bonus for something, you made a big sale, or you've done a good job for your boss, and they give you some bonus, well, take a chunk of that or all of it if you can, and put it away. If you're getting on, you're older, and if you're in your 30s or 40s and you're still looking to buy a house, well, this could be a way for you to continue to save toward it. If you're close, then you might have a different perspective. But anywhere from 2 to 5% is just, to me, is like, well, even if you lose 2, 3, 4, 5% of your portfolio, you're exposed. I fully believe in this protocol. I fully believe that Bitcoin's going to be around. I fully believe that we're going to have the right to own it here in the United States. I may be wrong. They may pull like they did with gold back in the early 20th century. They may make it illegal for you to own it, but I doubt that. I think it's too entrenched, and so I think we've got way too much Wall Street firepower behind it now, and that want it to happen. So, but if you're older, how can you argue against owning just a little bit? Just a few percent, and if not for you, for your kids. If you're sitting on millions of dollars, how can you not own some of this for your kids and your grandkids? To me, it's a no-brainer. But it all depends on each person's individual risk preference and their needs.
100%. I completely agree. Everyone's different. It kind of depends on how you want to approach it. But again, if you're a little bit older and you've built up some wealth, I'm going to use your argument, James, from now on. It's like, what does 1% cost you? Like what does it matter?
And typically when you do that, you're legging in, and you're legging into the trade. And so you're going to start doing your work. you're not going to just buy 1% and forget about it. It's going to needle at you. You're going to go, let me look a little bit more at this. And then and if you're a smart person, if you're a critical thinker, then you'll go deeper down that rabbit hole. And next thing you know, you'll have 2%. And then, next thing you know, you'll have 4%. And then, in a few months, you're probably hiding your Bitcoin purchases from your wife.
Yeah, it tends to do. Saylor is going through this moment right now, by the way. She's like, more. But no, and Jay, I just want to say something too, James, is that you don't just walk, you don't just talk the talk, you walk the walk, right? You put your money where your mouth is. This is something that you have, done yourself. Obviously, me as well. Started stacking him like 23 years old, and maybe I went like 90% what I was making at the time into Bitcoin. Went a little bit crazy. But
I own none. I own zero.
Me too. I lost everything in a boating accident. I don't even know what Bitcoin is.
I don't know what you're talking about.
Yeah, it's what have we been talking about for an hour? Okay, but look, we're getting almost to the top of the hour, and I want to say this, right? Which is second to last question, which is the idea, especially for the younger generation, right? Now Bitcoin's at 73,000, right? It's basically, I just got to say, everyone, like I've been telling you for 5 years, and so has Bitcoin Twitter. But, the reality is though, that, this thing's at $73,093. Are people too late to Bitcoin? Are people too late to benefit from this? Specifically, if you're younger, if you don't have that much capital accumulated.
Well, I think that Bitcoin continues to accumulate momentum here with institutional investors in particular, and it just grows, and this ecosystem grows, and the benefit grows, and if it's gonna 10 or 20x in the next 7 to 10 years, how is that a bad deal? I mean, that's not late to me. And then what happens if you own nothing and the debt spiral accelerates? All these, fools up in DC and at the ECB, they drive the whole ship into hyperinflation, and Bitcoin is the one place that everybody runs to, and you don't own any. I mean, that to me, if you just own a little bit, you'll save yourself. I mean, think about it this way. So yes, okay, you're right, Nico. Bitcoin's at 70,000. There's only 21 million coins that are ever going to be created. We've probably lost a few million of those. So let's pretend that there's going to be 17 million left. It's likely less than that. And there are coins lost every day. But with over 50 million millionaires in the world, not every single one of those millionaires can own a whole coin. Why wouldn't you want to own at least part of one?
Amen to that. Very, very powerful statement. And I think we're going to wrap it up with that. I do want to be respectful of James's time. Very, very busy these days. Guys, go follow James on Twitter. He drops some amazing signal. And check out his newsletter. Go to jameslavish.com/newsletter. Has over 30,000 readers. I'm personally subscribed. Big fan. I might not understand everything that's being said. This is why I bring James on the show, so you could explain it to me. But yeah, James.
Come on, it's super simple. It's super simple.
Like I said, man, I understand Bitcoin like the back of my hand. I'm still like learning the traditional financial system. Good. Man, I have to tell you this, James. I sent an international wire today. It took me 3 effing hours. Oh my God.
And half a tree in paperwork, and it won't settle for at least another day. Yeah. And how much did it cost you?
Oh no, it's the exchange rate, the thing. What's your favorite color? What girl did you date 5.5 years ago? Like,
what address did you live at when you were 3?
It was Absolutely crazy. Anyways, and Bitcoin's gonna win. After that experience, I'm like, all right, it's done, it's dusted. I understand, I get it now. Anyways, James Lavish, always an honor. Thank you so much for joining us on Simply Bitcoin IRL. Really appreciate you, and keep kicking ass, because man, you're one of the brightest minds in the space, and really appreciate you, James.
Well, thank you. I appreciate you having me on, Nico. Always a pleasure, and I'll see you next time.
All right, take it easy, James. Bye. All right, guys, that was our show. If you enjoyed the show, you know what to do. Make sure to smash that like button and consider subscribing. We'll be back tomorrow for the live show, 12:15 p.m. Eastern Standard Time. There's 1,200 of you watching right now, so just smash that like button. It really helps with the show. Anyways, I'll catch you guys tomorrow. Peace out.
Episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.